Hey there, everybody. Thomas Wood with Basecamp Trading. It is Wednesday, February 28th, and we're going to take a look really quick at the Russell here. I want to talk a little bit about paying attention to topping and bottoming tail patterns and what those are and what they tell us with the market. So first off, what is a topping or bottoming tail? What it is when we get these really long wicks to the downside here. It's a bottoming tail, or a topping tail is when you get really long wick to the upside up here, like you had at the very top up here in the Russell, and like we had earlier today in the Russell. And what it's telling us is that the market, it was originally pushed one way or the other, so pushed up or pushed down. And then if, let's say for the bottoming tails here, it was pushed down, and then buyers turned around and said, no, we're coming right back up. And buyers retraced that entire move. It broke down again. Buyers came back, said, no, brought it all the way back up once more. It's shown us that there's an unwillingness for this market to sell off down there. There's a lack of sellers down there to maintain those price levels, because in order for it to continue to run, you have to have people continuing to push the price down. Well, in this case, there's no people down there selling. It gets brought back up every single time. So it tells us that there's an unwillingness to sell down here, or in this case up here, there's an unwillingness to buy up here, which tells us to watch for it to go the opposite direction, because the market's going to move through the path of least resistance, basically. And the least resistance is to the upside, because there's nobody down there to sell it. So it tells us that there's going to be a turning point, or a potential turning point. Now, one of the ways that we look at this is we look for pivot highs and lows for support and resistance, and then we watch if we break through a pivot and then come back above it, break through that pivot and come back above it. So you can see back here we had a pivot low at 1530 and a half, broke through it, pulled back, closed above, broke through it, pulled back, closed above, broke through it, pulled back, closed above. That tells us that what the market's doing is it's running stops. It's knocking out all the stop losses below that pivot, because normally what should happen when a support resistance level is broken is the market should accelerate very quickly in our direction. In this case, it would break and then immediately get rejected. It'd break and immediately get rejected again. So it's kind of like a rubber band. It gets stretched and then snap back the opposite direction. You can see what happened here in the Russell, for example, as we've turned around, we've accelerated right back up from where we came from. So keep an eye on that, especially in regards to when we're breaking through support resistance levels, watching for that market to knock out the stops and then go the opposite direction. So that's all I have for you for today. I'll see you in the next one. Don't forget to like and subscribe if you're enjoying these videos. And until next time, happy trading, everybody.